Hello, this is James Graff with another Mortgage Minute brought to you by Advisors Mortgage Group. I'm going to talk to you about some events that are unfolding this morning, August 11th, 2020. Stocks are higher within striking distance of a new record high. That's amazing to me after seeing the worst GDP quarter in the history of GDP quarters. Interesting to me. How do you come back from that growth domestic product? What is fueling the stock market, if not the FANGs, which now comprise a stock market of their own, which is only, I think, fourth in the world or so. New York Stock Exchange, the NASDAQ, and the Japanese stock market are larger than the top, I think, 4 companies in the Dow Jones. Anyway, we also have news from President Vladimir Putin, who claims, and I emphasize claims, that Russia has given regulatory approval for the world's first COVID-19 vaccine. That's a bold claim, considering they haven't tried it out on more than 100 people. He claims he's going to try it out on a relative of his. Anyway, very interesting news. Basically bragging rights, I guess. I'm sure President Trump would love to say the same thing, but we have the FDA to answer to, which I don't think President Putin has the equivalent of in Russia. Anyway, moving on. Mortgage bonds are lower, and the 10-year has jumped up to 0.63%. It talks about how the 100 people have only tested it, and the efficacy is still a question. So they have a vaccine. Does it work? Okay. Basically, according to Redfin, they said that 56% of single-family homes faced competition, followed by 44% of townhomes and 42% of condos. So that's interesting to me. Faced competition. I'm not sure what they're saying there. I think that what they're saying there is that we've got bidding wars going on. The PPI came out. The Producer Price Index for the month of July came in hotter than expectations. Not watched so much by everyone, but it should be. Headline PPI increased 0.6%, which was double expectations. A surprise. On a year-over-year basis, headline PPI increased from negative 0.8% to negative 4%. So we're looking at negatives, right? So kind of irrelevant, I suppose, but interesting to watch. The core rate, which strips out food and energy prices, was up 0.5% in July and increased from 0.1% to 0.3% year over year. So we see some pressure there, but not much. The more important consumer price index report, which measures inflation on the consumer level, will be reported tomorrow morning. That the Fed will be watching, and everyone will be watching. The other ones aren't so watched. They're relevant. CoreLogic reported their loan performance insights for the month of May, showing that 7.3% of mortgages were 30 days or more delinquent, up from 6.1% last month. A bad trend. Loans 60 to 89 days past due spiked from 0.7% to 2.8%. That is a bad trend. We'll see if that continues. Loans that are seriously delinquent, or 90 days or more, increased from 1.2% to 1.5%, a modest gain. This is the first annual increase in serious delinquent loans since November 2010, which was a bad time for mortgages, if you can correct, or almost 9.5 years. It's been a while. Homes in foreclosure remain stable, however, at 0.3%, but I believe are artificially low due to all the government programs that are keeping them at bay, which I mentioned in, I believe, this video or a previous video, how the President Trump is basically commanding or suggesting, I'm not sure, that all the federal agencies continue their for eviction easing. It does not talk about states. It does not talk about anything but the federal programs. But that's going to affect that number, which was, I will repeat it again, home foreclosures remain stable at 0.3%, very low. Frank Martel, president and CEO of CoreLogic, said, quote, government and industry relief programs have helped to cushion the initial financial blow of the pandemic for millions of homeowners. COVID-19 and the resulting pressures continue to influence the economic activity of many households. Barring additional intervention from the federal and state governments, we are likely to see meaningful spikes in delinquencies over the short to medium term, unquote. That's CoreLogic's Frank Martel, CEO. So, mortgage bonds are moving off resistance, and it would not surprise us if they even test higher numbers like 103.219. And with that, I'd like to thank everyone for listening and wish everyone an absolutely wonderful day. It's been James Graff with Advisors Mortgage Group. Thanks again.